Hello friends and welcome to my YouTube channel Simply Talks, and today I'm going to talk about Aventel. Can this be a 6x from here, or should one not buy into this defense company? So let's get started. First of all, let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Aventel Limited, here's a small request: kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you pay for 10 months, you get 12 months access. So you pay upfront for 10 months, that's $100, and you get a 12 months subscription for that. For detailed market or company talk, you can directly email me and we can work things out. Also, if you cannot pay through credit card, you can directly email me, and over the next few months I may start with a direct bank transfer perspective. Now about the company. Established in 1990, Aventel provides a wireless technology for defense, gets major orders from government and the DRDO, and it is probably the only player in its space that is doing all this. It get orders from DRDO and got an order from DRDO just recently. The market cap of the company is around 150 to 200 crores, so it is a pretty small cap company in that regard. If you look at the numbers, then financially speaking, the numbers were very robust for the Q3 FY21 versus FY20. Sales were up by 86% to 25 crores. Profit was up by 70% to around 5 crores, and it has a decent promoter holding. Return on equity of 20% is decent, and net profit margin is of 13.8%. There's high promoter holding and low institutional holding, quite understandably, but over a period of time, when it starts performing even better, you'll see that more institutions will get into it. One more thing that you need to notice is that they normally have sales of around 100 to 120 crores for the year, and the market cap of the company is around 150 160 crores. So it is just trailing above one time sales, and I believe that over a period of time, this could become 3-4 times sales easily, and this is one of the reasons why I bought the why I am very bullish about it. I have not bought into the stock, but I am very bullish about this company, a very small cap niche company that is doing extremely well. The other reasons I'll just explain later on in this presentation. If you look at the performance, then stock has underperformed over the last 2 years, has not done anything, and this is typical of any small cap company. You pick up any company in that regard, the stock performance is normally that not that great when it comes to initial stages, when it is a very small cap, and then one trigger makes the stock really go up. So it has been down 60% from the 2018 January highs, if you remember the last time the small cap rally happened. So this is trading at a discount, although most of the small cap companies have scaled new highs. So this is one thing to note about. Have surged 120% from the March 2020 lows, so that is one more thing that you need to look at, that yes, it has gone up from those lows of March 2020, but it has not surged into new highs of or taken out the highs of 2018. Results have been impressive, and it has been consolidating for some months now. In a range, it has been consolidating, so there could be a chance that in the next few weeks we'll see an upsurge in the stock. Why I believe it can be a 6x from here, so it can easily end up being you can say 5-6x from here over the next 3-4 years. Strong barrier to entry, as DRDO orders hard to get. So you need to understand that whenever a private company gets into government orders and getting into defense government orders, that is extremely rare, and this is one company that is doing that. and it is extremely hard for more companies to do the same thing going forward. So it is not like making any chipset, making any electronic products that other companies would get in and probably take out the margins and become better. It will be very hard for this company to probably gain market share, or for a new company probably get into this space. Need for technology in defense will increase. So this is a company that provides, you can say, state of the art technology for all these, you can say, defense mechanisms, for products, for scanning products, for all the products that DRDO fetches for electronic products. And so technology will only get in demand even better going forward. So I think the scope for the company is even better going forward from here. Valuations are extremely attractive, as I have mentioned, that one time sales is probably a pretty decent valuations to be getting at 1.2 times sales. It can easily be 3-4 times sales going forward. And I believe that over the next 1 year, 1.5 years, once this pandemic subsides greatly, the business will perform even better. So in that sense, this looks a very good prospects that one can probably look at and probably buy into incrementally. Trades at merely 1.5 times sales, as I have mentioned. So this can easily be 3-4 times sales or so. The kind of business that Aventel is doing, I think the market cap of the business is extremely small, because this is one of the rarest companies in the space that is listed. So this can easily have a market cap of 2-3 thousand crores going forward, or at least 1,000 crores, say from here in the next 2-3 years. So the surge can happen anytime. We have seen with other small cap companies that I have talked about, that stocks do perform, and perform at any time whenever there is a trigger. We need to just spot those companies and stay with them. So this is one of that kind. High net profit margin, ROE, and low equity will only help once things improve, because then the surges will be very quick. There will be upper circuits day after day, and the movement could be extremely swift. So what needs to be done? In my opinion, buy as an SIP. Start buying probably from today, and do not worry about the price movement and all. Just look at the numbers and the results quarterly, and keep on adding little bit from these levels and on declines over the next year, year and a half, next 18 months. Keep on accumulating, and then just sit on it for about 4 to 5 years, and you'll see the difference how the performance ends up happening. Because this is not something that will happen very quickly. It can happen, but we don't know. So we have to stick with our ideas or our convictions in the smaller companies over a long period of time. And at the start or at the beginning, have only 5% exposure, and then once things really improve and there's performance from the stock, then you really buy big into this company. But keep track of news flows, keep track of orders, keep track of numbers. That is extremely crucial. So this was my video on Aventel. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.